Hey everyone, markets rejected today at this 585 level. If you recall from our video last night, we highlighted this dealer cluster zone here that we were watching. We wanted to see how the market was going to respond to this 585 to 590 level. The gamma exposure data was showing that potentially we could see some more upside, but we wanted to see volume coming in here at those levels today. Of course, the volume was right at the open. We saw the sell off here down back into the 580 strike. And if you've studied gamma exposure behavior in positive gamma environments, a lot of times dealers are selling the underlying shares in order to hedge their option positions. So as price moves into this zone here that we've got highlighted in red, dealers will have to begin selling on a day like today when the selling pressure is already coming in from different angles. And then you've got option dealers selling shares of the underlying on top of that. That's why you see such a drastic retracement like we saw today throughout the day. Most of the negative gamma exposure was in the 0 DTE contract here at the 580 and 579 strike. So a lot of that negative gamma exposure is rolling off today. That's going to, kind of release some pressure from the market, so to speak. I also noticed that a lot of volume was coming in here at these strikes between 580 and 585 on the downside. Obviously, a lot of that was put volume today as the market was trading lower. So it is possible, just from a market mechanics standpoint, that if we get any kind of momentum above 580, we could see a very quick, 2-day bounce right back into this 585 level. On the downside, however, the first level that I'm going to be watching for tomorrow and Wednesday is the 575 strike. There's not a lot of gamma exposure on a net basis at this strike. However, just from a support resistance level from the price action, you can see, just a natural line in the sand from where we were trading for 2 straight weeks. We were trading in this range while the gamma exposure level was pointing higher, coming in here about this area. We broke through the range, traded there for a couple of days, and then really took off. So any kind of weakness heading into tomorrow could see us come back down and test this 575 level. So those are the two areas that I want to watch. But on an intraday basis, we use this 0 DTE GEX flow tool. Basically, this allows us to see the trend of 0 DTE contracts on a gamma exposure basis. You can see we started out the day negative across the board on all the strikes that we were tracking. Obviously, this 581 and 580 were the two most negative strikes right out of the gate. And as the day progressed, we could see that those strikes really started to accelerate to the downside. And so we track this intraday to find these targets. Are we moving to the next major level, for example, the 580 strike, or are we moving to the higher level, which would be the 590 strike, as we were discussing yesterday? Today was obviously a move to the downside, hitting that 580 strike near the end of the day.
Yeah, thanks for pointing out those factors about SPY, Anthony. And I wanted to look at the Nasdaq. So I have QQQ pulled up. There's a lot of overlap between QQQ and SPY in terms of their top holdings. The chart looks a little more negative for QQQ. In that it closed below the whole moving average, and technically it has room down to this 484 area, which is the middle Keltner. However, I find it interesting that these Keltner channels, they're still in a very bullish configuration, pointing up at a very sharp angle, and we still have this room up to the 500 or even 503 area to reach the top of the Keltner channels. So just like with SPY, Anthony, the QQQ showing this 490 dealer cluster zone being hit. And we never did really reach this 500 to 505 area, where we see these two larger gamma clusters on the upside. And so it's OPEX week. We have VIX expiration in the morning, pre-market. And, this is really a week where we can see some swings in both directions.
Yeah, that's right, Sean. There's multiple possibilities for all kinds of volatility this week. We're kicking off earnings season. We've got VIX expiration. We've got the monthly OPEX, like you mentioned. And we've also got some interesting news. The news that came out today out of ASML, warning of weaker China sales, really hit the semiconductor space. Another weird thing about this was that this was actually an early publication of its results due to some sort of weird glitch on its website, really catching investors off guard, not expecting that. And just diving in a little further into semiconductors, NVIDIA specifically, you can see the nasty dip that took place this morning, especially. But overall, NVIDIA still in this really strong uptrend. The gamma exposure picture still looks positive between 135 and the 150 level. So this could be a really nice opportunity on any kind of weakness here, continued weakness over the coming days for a potential entry back into these levels. I know earnings is coming up as well, so that's something that you got to keep in the back of your head. However, the GEX picture does look pretty strong. So this 125 to 130 zone looks really interesting to me from a risk reward perspective for long entries.
Yeah, Anthony, when I look at the VIX, the VIX did have a pretty good move up. We actually alerted in our Discord that the VIX over 1972 looked like it might squeeze, and sure enough, it was minutes after we posted that we saw the VIX start a move that went from that 1972 area up to the 21 area. And that got it to basically, as you can see here on this chart, right above the middle Keltner channel. I'm going to look at a couple of things in a second that give me reason to believe we might actually not continue straight up to 22, which is the top of this channel. We might actually come back down and once again retest these lower areas. We are below the whole moving average. I apply the same rules to the VIX as I do other stocks when it comes to some of these indicators. And to me, being below the whole moving average is a more bearish sign for whatever instrument you're looking at. So in this case, the VIX being below the whole, we should be looking lower. And sure enough, once we crossed and closed below that, we've been moving down ever since. We'll briefly look at the gamma exposure. The option volume today was at 20 and 19 mostly, but I'm not seeing a huge amount of interest yet in reaching the top of this channel. We've got the VIX expiration in the morning pre-market. A lot of negative gamma rolls off then. It wouldn't surprise me to see the market continue to make efforts to push higher and volatility to drop toward this 19 area, where I'd like to see the VIX stage some sort of a stronger rebound.
Yeah, thanks, Sean. VIX expiration, always an interesting time in the market, especially when you got the monthly options expiration, you got earnings season kicking off. There's so much happening this week, so definitely something to watch. That brings me to the next ticker I want to talk about, which is GLD. We've discussed this a number of times over the last several weeks. Last week in particular, we mentioned that this pullback into just above the 240 strike here looked like an interesting long entry point from a risk reward perspective. We got that big move that we were looking for up into the 245 strike. We tagged 246 today. This gamma exposure is still positive between 245 and 250. So we think there is further upside coming. We're looking for any kind of pullback below this 245 level to re-enter long positions. And I say re-enter because we actually exited one of our long plays today on this move. We had sold the 245, 240 put credit spreads. We locked in 6% gains. This is on our $10,000 educational portfolio, which we discuss and track here in our community Discord channel. I'll put a link in the description below for you guys to check that out. But we locked in those gains today. Basically, we had sold the October 18th expiration, as you can see here, and we just don't want to risk a drop in the next couple of days back below our 245 strikes, and we're going to potentially re-enter on any kind of drop for another move back into this 250 strike. We think ultimately that's where GLD is likely headed in the next coming days and coming weeks.
We've done really well with GLD, Anthony. We mentioned Google yesterday, and regardless of how the market looks, it's still a market of individual stocks. Google had more of a bullish look to us yesterday. We had a move higher while the market was moving down, and it looks like this 170 area is still live. We have positive gamma. The chart is still holding this whole moving average, and the Keltner channels are starting to angle upward with 172.90 as the upper limit. So I could easily see this 166.90 closing price morph into something a little bit more bullish and potentially see $4 or $5 positive move here.
Like I mentioned earlier, if you guys are interested in discussing market analysis and gamma exposure trade setups, I'll put a link in the description below to our community Discord. It's free to check out. We have several public channels. I definitely think you guys should come on in and join the conversation. Also, if you're interested in accessing our gamma exposure dashboard and option flow analysis, head over to geeksoffinance.com. You can sign up and become a member. I'll put a link in the description below. Thanks so much, everybody, for watching. We'll see you guys in the next video.